the channel for learning about trading and investing. Welcome to Markets Tomorrow, the daily market analysis show, where we look at what happened in the market during the day and how we can plan for a better trade for the next day. So what a day it was today, right? The deep cuts and a black path is what happened in the Dalal Street, right? And it was an expiry date trade that happened, right? And May 13, Friday 2022, that's what the analysis is going to be for the next day. And the pre-market analysis for the next day would be based on all these parameters that you see, and we will also wrap up some actionables at the end, right? Let's get and see the price action. See this wide range bearish candle on both indices. Big wide range bearish candle, more than 2.5%, 3% kind of down move is what you see there. How much we lost? 2.2% in Nifty and 3.3%. That's 1,161 points lost in Banknifty, 359, 2.2% that's lost in Nifty. So bigger fall has happened on Banknifty, which was a surprise. Which for the bulls, it was showing clear bullishness actually from the futures OI, from the put call ratio, right? On the FNO side, it was and the price action side also, it was showing clear bullishness yesterday. Because look at what happened to the Nifty yesterday and look at what happened to the Banknifty yesterday. It was a big up move and it showed a dragonfly. Probably the dragonfly was an indication of a downtrend rather than an uptrend like we thought, because it was last 3-4 days it was trying to move up, and that trend reversal has happened, but it was a big fall. And now we are very close to Nifty. We are very close to the previous swing low of 15,650. And 670 actually, and Nifty Bank we are still further down towards 32,000, right? There we have another 1,000 points to go down, so that's where we are sliding down. Trend line channel breakout failed, a head and shoulder pattern, and has broken down and then went further beyond that, and all supports lost, and right. So this is what gap down and then trended up down. Big sell off, methodically, periodically, well planned set off is what you can see there. Look at this trending up, slide up, buying and then selling, then buying, selling, buying. So today it would be if I might have sold at least 5,000 crores, is for sure. Maybe that's for sure. And Nifty Bank also, you can see that it's a big. It's a more less than 1% of gap down in the morning, and then it was trendingly down. Zigzag down move is what you saw in trade. Bollinger Bands, you see expansion to the core. The volatility is because the distance from the median till the where the price is huge. You have volatility expansion and walking on the bands that has happened. Clear bearish is indicative in the Bollinger Bands with high volatility. That's exactly what has happened. And so we have wide range bullish and bearish candle that we have intraday, gap down and further trending down. Bollinger Bands, everything indicates it's a trend line channel down sliding is what is happening, right? Clear bearish actions, and but support resistance level, what do they say, right? It's very close to a previous swing low, but not at there. So 15.5, that 15,500 and 15,650 zone where the previous swing low would come in. That's where the first support would be, and then below that 15,350, 15,450, and then 14,900 to 15,100, that zone. And the upside resistance would be at 15,950, which is Fibonacci 16 retracement level, which has slipped now. And above that you have the 16,300 and 16,350, 16,450, which is Fibonacci 50, and then above that you have a gap resistance 16,550, 16,650, then above that 16,700, 750, and 16,800, 900, which is a Fibonacci 38, and then rounding number 70,000. Banknifty, for some reason that screenshot is not visible as usual. I have to fix that later, but let me straight away go in and see what is it showing here. Let's get to the daily channel, daily charts. What do you see here? So it's little 1,000 points away from the previous swing low. That's not a lot for the Banknifty, but today you can see that it is if that support where it is fallen on today at 33,300 kind of levels, if that is breached, that will be the first support, and that is breached, it comes to 32,400, 800 levels, and then below that it would be 31,800, 32,150 where the previous swing low is there, right? So that's what you have to immediately look down. 32,000 nearby levels in the upside resistance after the 34,100 Fibonacci 16, which was breached today. If Bank Nifty managed to close above that, then it will be 34,350, 750, and then 35,000, which is a 35,300 is Fibonacci 50, and it's also a gap resistance upside. Right? Then 33,600, 33,900, 36,800. A lot of resistance on the upside. There's another gap resistance on the upside. So making note of these levels, but if it is down sliding, then probably we should look at 32,000 kind of levels, which is the previous swing low. If that's breached, then you straight away go to 3,500 and 31,000 kind of levels, right? So that's where it is. But that's 1,000, 2,000 points down that we are talking about, right? So clear bearishness, sliding trend line, plus a lot of resistance on the upside, all supports given up within a trend line down, a lot of very close to a M pattern on the daily charts, neckline of which is the previous swing low, right? And probably could retest these levels on both indices. The previous swing low can be retested. It is almost tested in Nifty, but Bank Nifty also could eventually come to and retest that and then consolidate and make an up move further, or it could breach that if this bearishness is going to be severe. That's what it is. So that levels of 650 on the Nifty and 32,000 on the Bank Nifty has to be very closely watched, right? So momentum clear, no doubt about that. It's bearishness, but thing is the weekly charts also has turned to be bearish today, and that has happened for the Nifty as well as Bank Nifty. So clear bearishness on momentum, and there's no divergence as seen as of now. Trend wise, if you see, it's just clear trend bearishness on the daily as well as weekly charts on, and it was rising bearishness, rising the strength of the ADX indicator, right? This green indicates rise, and this is DMI negative, so clear bearishness all around. Volatility again spiked, has been spiking a lot, every day, so look at the spike that is happening from the 18 kind of levels. It has been continuously spiking up, and it's now at 24.26 is well. It's 6.4% of India VIX. The fear and greed index spike is what has happened, and implied volatility on the Nifty is showing that it's very close to 24, and implied volatility percentile is showing 92.3%. It's all the peak. The 52-week high level is 92. That's peak of the volatility is what you're seeing, right? So have to be very cautious since it's at a very high level. So the reversals and choppy moves and then stop loss hitting are very much problem and very difficult to predict. Premiums will be very high, and what you lose maybe more than what you had planned if you are not stop lost and if you are not disciplined, right? Opportunity analysis may not be relevant because it's for the next expiry May 19. That's going to weekly expiry, which is going to get traded actually from tomorrow. So these levels may not be that much relevant. But because the put call ratio is 0.41 is it's at the bottom. So put call ratio for the Nifty is at the bottom. 0.52 is also very close for the bank. So also it's at the bottom. Short build-up is what happened in the futures opportunity definitely. So the overall bearishness is there, but look, just for reference purpose, again for the expiry of May 19th, you can make a note of the Nifty and Bank Nifty level. 16,000 and 7,000 point range is where the highest put and call rating is there. 15,800 and 16,000 is where the highest, second highest put and call rating is there. 32,500 and 35,000, very wide range, is where the highest put and call rating for Bank Nifty is there. 32,000 and 34,000 is where the highest, second highest put and call rating support resistances are there. So there's not much clarity on this as of now because it's a new expiry, as I mentioned. Heat maps are right. It's complete chaos, and complete red is what you see, and all the sectors are underperformed. So it's across the sector selling that is happening, not just specific few stocks or results. It's across the sector. Selling is what is happening. And as you can see, HDFC has given up that support zone, but it was trying to climb up and fallen back to the various zones. HDFC Bank has done like that, and HDFC also slipped closer today and then seems to be slipping back to the various zones, and lands now coming back. It's at a support zone, so you have to check whether it is falling back into the trend line or not. But today is a bearish day and slipped into the momentum bearish zones for now, so you have to keep a close watch. IT Infosys is an IT sector is unable to come up today, also another red day. TCS is showing some strength for showing strength in spite of the fact that the sector is weak. And it's at a very good support zone, and it's not going to give up that easy. So momentum is trying to hold itself in the sideways. I see the bank, if you see again another red since in the day financial services was down and this turned to the bearish on the short term from the momentum perspective. So there is a support down here at the blue color ascending triangle breakout where the initial breakout happened several months back, and that could actually support now. We have to keep a close watch. Kodak Bank was performing still till yesterday. It was moving up and then it is hit the resistance at the same place where it is continuously facing resistance since last 5 or 6 times, as you see here. So they stopped there and then fallen back, and momentum is unable to climb into the bullish zones and then continue to remain in the sideways. Right, so none of the banks have performed, none of the sectors have performed, none of the heavyweights obviously have performed. Right. TCS for some reason it is stuck. It's at a major support zone. Correction also is very less that has happened in spite of all the drama that is in the markets. So there's a lot of strength seen in this stock TCS, right? But remember, it is not in the bullish zones. It is at a consolidating at a support zone. You have to keep a close watch whether it's going to breach that support or not, right? When the market falls further down, if at all it did. Sectoral performance, if you see IT, all sectors are down. 1% down IT, metal 3.7%, 4%, nearly 4% of fall in the metal. 2.1% reality, FMCG 1.2%, pharma 1% down, auto, which is holding on to sideways momentum till now, is 2% down. So across the sectors, all the sectors have turned bearish. No, not a single sector is there which is not bearish, or at least which is sideways, or in the short term. All of them are bearish, and some of the sectors are in the medium term as well as this short term. Both are bearish, like IT, both bearish, metal. No, pharma, both bearish, right? And FMCG is holding on medium term at least sideways. Reality all bearish. So clear, evidence of bearishness across the sectors. What you see. Yeah, today's institutional participation FIDA data is not coming, but look at the buying that is happening from the domestic institution. 4,180 crores of buying has happened, and big heavy 3,600, 3,900, 3,300, 5,000, 2,000, 3,000. That's just kind of selling from the foreign institution that's happening without any stoppage, and as long as if that is not stopping, then there is no way that the market can hold up to the levels where it is. Heavy selling continues. Now look at the currency. What is happening is that rupee is weakened to the all-time high level. Like $1 cost now more than 77.5 kind of levels, and it's shooting up. And look at the dollar index, which is historic high, and it's a 20-year high or something, and 104 point about it's breached all the levels, and momentum is up, and rupee is weakened to the core. No amount of intervention from the banks is going to help in the situation when the dollar index also is spiking to break out all the resistances. So not good. Look at another thing. This is the happening place. The mother market US indices is what you see. Dow Jones crashed and lost momentum. Major resistance earlier. Once again, the another resistance that is there, the 32,000 level also is lost. No, it has turned clearly bearish from the momentum perspective on the short term. No US 100, that's said. Nasdaq also has fallen down. The major support zones, two of them, and then this so you can see S&P 500 also breached. So all the US indices has clearly breached and turned into bearish momentum, right? So which is exactly why the DS and why the FIs are selling, which is exactly why our markets are falling down, right? Crude oil is also still maintaining 102 plus level of levels, although the momentum is sideways. Some kind of consolidation is happening right. Gold for some reason is unable to maintain the up move. It is still in the bearish zones and unable to climb into sideways. So that support zone where it was attempting to hold on did not work out, and looks like it is taking another middle way support near the 1847 kind of levels, right? So gold is not catching up despite the fact that the market is falling drastically. This, which was not the way normally gold behaves when market crashes. Gold catches up, but that's not seem to be happening. two short selling trades, loop in India and HDFC Asset Management. Loop in is showing that it's a trend line channel down mover is happening, bearish momentum and bearish trend, right? So you can give a good swing trade. HDFC Asset Management also, it's clear consolidation breakdown, support is breached in the weekly, all entries is made on the daily, lower time frames on both, make a note of that. But clear support zones, long support, retested support zones are breached. That means it can give very good swing trade. Momentum is also bearish and trend is also bearish, even in the medium term, both of them. So daily and short term 2 or 3 swing trades, it can give good profits. Wrap up, absolutely no change in this entire slide since last minute. Is clear moderate bearishness is what I have, right? Reason is bearishness is all about in the trend indicators, in the momentum indicators, price patterns, Bollinger Bands, all of them are saying it's short-term bearish. Now it has turned medium-term bearish also, right? So the higher time frames also reconfirms that from today, and we are very likely that we almost breached. We are very close to breaching the and making a previous new making a new lower low, new lower high was already made, new lower low is also made, means it can further continue the down move. More is what it indicates, and but even though there is a possibility that it is retested and then it ends and makes a bottom and then moves. Well, possibility is there, but price action, if it breaches, then it may be really bad. There is no longer consolidation, as the Bollinger was saying a few weeks back. Now it is clear bearishness. The RBI rate hikes triggered that in the US market, inflation historic high, dollar is shooting up to historic 20-year high, and aggressive selling by the Fyers, and weak rupee has gone to some 77.5, and crude is still above 100. A lot of the war news is still there, so volatility all around. So just stay away from the market, especially trading. If you're not a professional, if you're trading, cut short your position size and then have hedge positions, and always do have risk defined strategies applied on your trades rather than naked sells. Intraday is very difficult when VIX is on the top. Even if you're short side selling, also it's very difficult because it's very choppy and volatile, and premiums will be high and the losses may exceed what you may have anticipated, right? Slippages can be more and all of those, right? So FIs are selling, so volatility is high, VIX is about 24, keep that in mind. So that's what my view is. Moderate bearishness as it was there the last 3-4 days, no change. Hope this helps you to frame your own trade plan and your own market view. If that helps you in some way, and if you're not subscribed, please subscribe right away, like it, put in your comments and share it to maximum. We have very few subscriptions, appreciate the help in this. Thank you so much. Happy trading, happy learning. Bye.